Last week, Bitcoin was down about 10%, and people are starting to get really fearful this week as prices start to test support and pull back even further. And so in this video, I'm going to answer the question, is Bitcoin dead, or is it going into an extended bear market, or is this just a dip for a potential bull market throughout the rest of the year? So we'll talk about that and more. But if you're new here, my name's Chris Dunn. I'm known as the world's first Bitcoin trading and investing educator. Been doing Bitcoin videos for over a decade now. And my goal here is to help you sharpen your skills so you can become a better investor, trader, and entrepreneur, however you want to build wealth. Now, let's go ahead and just jump into the charts and talk about kind of the bigger picture here. And this is something that a lot of people don't ever look at, which is the yearly chart. And why do we look at the yearly chart? Well, quite frankly, the areas work like a charm. When you look at the major support and resistance areas, these tend to work really, really well. And what I mean by work is they hold price. And what we can take a look at is how over the past 3 years, so if you look at the last market cycle, and by now, hopefully you've seen my videos going back many years talking about market cycles and the different phases of the market cycles. But if you take a look here at the 2020 candle, you know that we opened up down here at multi-year support around 3,500 bucks, had a big green candle, found resistance around, call it 30K. That was the high of the year. Going into 2021's candle, that was the low and the open of the year at 30K. Had a big run up, closed about 50% halfway down the wick. That resistance here around 44K became 2022's candle of resistance. And then you can see over the past year on the 2022 candle, it was kind of the halfway mark over this $30,000 resistance level that is now resistance for the 2023 candle. So the point is 30K has been a very important price level since 2020. And if we zoom in down to a weekly chart and get a little more color on this, you can see what this looks like. It was support going back here through 2021 and then has been resistance over the past year. And price has been squeezing now. It's been making higher highs and higher lows into this resistance level, but for the first time has had a really deep and aggressive pullback, which caused a lot of liquidations and a lot of pain. And we'll talk about how you can see that on the chart. But if we drill down even further to the daily chart, one thing that we know is the price action started the year at the low. Okay, so price action started down here around 16K and basically kicked off 2023 in a really strong way. And we've had run, retracement, extension now twice to the upside. And you can see we pulled back, but we're still holding above this 25K pivot low support area, right? But one thing that we've seen is how we've rejected off of yearly resistance, and now we've actually gotten below the 200 period moving average for the first time all year. Back here in the spring, when we had the whole banking crisis, this pullback was a really beautiful dip to a high probability support zone, which is where I started to buy around 19 and 20K and then took profit up here at resistance. Now, most recently, I've just been watching this pullback as it's caused people pain and started to scale in a little bit here, but I think prices could actually pull back much deeper. And we'll talk about why. But the biggest thing to kind of realize is it's not the daily chart that gives us the most clarity. It's actually the weekly chart and the yearly chart, because those areas tend to work the best, right? If you allow yourself to really just zoom out and not get tick locked on really short-term price action, right? Short-term price action has the tendency to make people have a lot of knee-jerk kind of emotional reactions to price. But if you can focus on the bigger picture and the bigger areas, that'll help you trade less and profit more, which is really my approach. Is don't try to day trade. Don't try to come in here and scalp. Look for the bigger picture moves and wait for those really just glaringly obvious areas to buy and sell. And so as we can see here, though, we've been stuck in support and resistance really for the past like 60 days or more. Really, as we started to get up here around 29K in mid-March, you can see we've been there for really 3 or 4 months. And as of right now, we're pulling back to retest that major level of 25K, which was prior resistance from the August of last year. And now this year has turned into support. So really all eyes are on this 25K level. And right now you can see we had the first kind of pullback. We had really 2 days of selling and then 3 or 4 days here of consolidation without much of a bounce. So it wouldn't take much for us to get another washout to kind of test this deeper 25K support zone. Okay. Now let's talk about what happened and why. And one thing that Glassnode did a good job at pointing out here is how a lot of short-term Bitcoin holders are actually in pain. In fact, about 90% of short-term Bitcoin holders are actually in the red right now. And if you read their latest newsletter, which I'll link up, you can see that this pullback caused the highest and the largest amount of liquidations since really FTX and the Luna collapse of last year. And over 88 or 90% of short-term holders are actually underwater right now. And one thing I'm always looking for as a trader and investor is how is the market going to cause people pain, right? It's kind of a weird thing to think about, but what's good to put yourself in the frame of mind of is how could this price action move in a way that it stops people out or causes people pain? And anytime that I see mass liquidation events or a lot of fear and FUD on social media around Bitcoin or crypto in general, when you have price action and market sentiment that line up at these extreme fear zones, that's when I start to get excited. That's when I start to look for buying opportunities. And so that's why, as an example, back here in March, I looked at this 19K dip as such a good opportunity because you had a fear-based narrative, you had a big liquidation event and a big pullback. And so that's where I like to step in is when you have this bull market structure to step in when people are fearful. Now, one thing that we need to be cautious of is the short-term to medium-term bear market potential. Let's talk about what that is. Now, the big narrative right now that everybody's thinking about is the halving that's coming next year, right? Basically, in late April, we're looking at a halving here out into, I believe as of today, it's like April 26th. So out here, we're looking at a halving. And what we know from the prior 2 halvings, and I've done tweet storms on this, but the bull market typically starts 300 to 500 days prior to the halving, which is actually what happened. The bull market actually started back here in January. So about almost 500 days prior to the halving. And it goes on for 300 to 500 days post halving. Okay. So if we are going to get something comparable to the prior 2 halving cycles, we could anticipate a bull market inside of this big yellow circle, right? Basically through the end of 2024. Now, again, nothing is guaranteed and the markets don't have to follow that, right? That's really just a mental model, just like the stock to flow ratio. And the one risk is everybody is anticipating a bull market prior to the halving. And now that in and of itself could be a self-fulfilling prophecy, which causes prices to go up. But that is also what caused the trap at 69K in 2021. Everybody was so dead set on the fact that Bitcoin was going to 100K that when it broke the all-time high here, mass euphoria struck in. We had a bull trap, and that led to a 70% or more drawdown across crypto assets. And so let's talk about going back to the yearly chart. What could this look like? Imagine that this 2023 candle is similar to 2019, right? The halving was in, I believe, March or May of 2020, on this big green candle. And so the year prior to that, yes, it was an up year, but you can see it wasn't able to break through the multi-year resistance. So imagine if this like 15K resistance zone is similar to the 30K multi-year resistance here. If we're not able to break 30, then the odds are that this area is actually going to hold through the end of the year. And then the anticipatory, I guess, decision could be that next year would be the explosive green candle to make new all-time highs. So what does that look like, right? That's kind of the short to medium term kind of bear picture. Well, that means that 30K holds, and inside of this black area prior to the halving next year, we're going to be somewhere inside of this circle, right? So in that event, what I'm going to be looking for is buy opportunities closer to support. So in between like 15 to 20K, any big washouts, any trade setups that I've back tested, like the buyer of last resort strategy, or any just big accumulation range type trades I'll be looking for. That's really the bear case. Now, what's the bull case? Well, the bull case would be something like this. If say 25K ends up holding either from here, or if we get a deeper pullback to that 50% retracement zone at 24K, and then we get a V bottom bounce, in that case, I'm going to want to look for breakout patterns up here around 30K, right? So those are really the two types of trade setups that I'm looking for on the long side. Now, on the short side, if we actually get a breakdown pattern where price comes down, we get a little bit of a bounce, and then we get a setup with a breakdown at 25K, that could actually be good on the short side. So again, one thing you'll notice is I am not directionally biased. I'm not trying to predict what's going to happen, because that's what amateurs do. What professionals do is we go in and we look at all the possibilities, right? Based on the charts, what are the things that we think could happen? We weigh the probabilities, what we think is most likely to happen, and then we create plans around all of those potential scenarios, right? That way we have the ability to protect our risk no matter what happens, and also potentially profit even if prices go down. So whenever we get close to a really important price zone like this, I really start to get dialed in and just pay attention, right? And really think through the possibilities and the probabilities. Now let's also talk about what the hype has been all week, which is the friend.tech, which is basically the social platform that allows you to, I guess we could say, like, buy access to people, but that just sounds kind of weird. You can see I've got it here on one of my phones, and you basically buy keys and you get access to private chat rooms that are linked to identities. So I'm doing like a little test. The first thing I'll say, guys, is don't go in here and spend a ton of money. Like there's some things that I think are kind of, I don't know if I want to say sketchy about the project, but are definitely risk factors. And I'm actually writing a article for the Daily Doe newsletter that's going to come out tomorrow, which is Wednesday, the 23rd. So if you want to read more about my opinion, you can read that. I'll link up the Daily Doe in the description. Make sure you're subscribed to that, because every Monday, Wednesday, and Friday, we're sending out a newsletter that goes into a lot of detail to help you grow your dough, basically build wealth. But, you know, I think this is kind of a cool and like interesting idea. Some of the tokenomics are set up in kind of a Ponzi fashion, and, you know, the development is kind of sketchy. So again, the biggest thing, guys, don't go in here just throwing tons of money at it. If you want to experiment and look at it for fun, do that. But I just see a ton of risks. Now, one thing that's really cool, though, is how much capital and attention this thing has really garnered. If we just take a look here at, you know, the fees that it has generated and the amount of transactions and the active users, you can see over $35 million in total volume bought and sold. Absolutely insane. 37,000 unique sellers, over 90,000 unique buyers. Like this is huge. And I think this is also like kind of like bear market things where we have more time in when prices are flat and boring, or even in a bear market, to experiment and kind of play around with things like this, where when prices are going crazy, it's more like all hands on deck. We're taking every trade possible. But I think, stuff like this, again, is kind of a cool experiment. But if you look back at what happened with BitClout, and there's even some like earlier examples, just be careful, guys. Expect that there's going to be a rug pull. Not saying that there has to be, but don't be surprised if something does happen. Also, there's really no like agreement. Like, what are people that have tokens on there? What is the agreement between them and their users, right? Like, it's just really messy. So have fun, but don't take it too seriously. And with that said, guys, focus in on what's happening around this 25K area. Make sure you've created a trading plan that can help you protect your downside and also position for upside no matter what the market does. Also, I was thinking about doing a little project, and I wanted to see if you guys had any interest in this. I said, let's have some fun. I'm going to take maybe like, 100K and see if I can turn it into $1 million. Now, I know that's only a 10X. Some of you guys are like, that's way too easy. Maybe I'll start with 10K and turn it into $1 million, or maybe it'll be 100K into 10 million. I don't know. Let me know what you guys think I should do. Show me some ideas with what I should do with the cash. I'm thinking like really high risk, high reward. I've obviously got my like really disciplined, trades and investments, but I'm thinking just kind of, shooting for the stars, shooting for the moon, whatever. I want to do some experiments that can help me do some content. I'm thinking like different trading bots or gaming assets, or even like NFTs, or I call it yield hunting, not necessarily like yield farming, but like hunting for yield. Just basically have some fun, take a little bit of money, and see what I can do with it. So show me some ideas, leave me a comment. Let me know what you think I should do. What would be fun and interesting to do some content around. If you have any questions, feel free to leave me a comment. If you like videos like this, please like it up for the algorithm. I haven't done much videos in quite a while, but I want to get back on here doing regular stuff. So let me know what kind of videos you want to see, and share this with a friend if you think anybody could get value from it. And I'll see you next time. Take care.